Hello, you're watching Lunchtime News on KBC Channel 1. And this particular segment is interactive segment, and we want to speak on matters, assurance, life assurance, whatever you know. What do you know about life insurance, and so much more, And our guest is Benedicto McKenna, who is the head of life and pensions at Kenya Orient Life Assurance Limited. And before we went on air, I was asking you, what's the difference between life insurance and life assurance?
Yeah, okay. Thank you very much, Gibson, for this invite.
Yes.
I'm happy that you have given us this opportunity to have a chance with our viewers so that they can be able to understand life assurance or life insurance for that matter. And just as you have asked me, I think the best thing is, first of all, to respond to your first question.
Yes.
Generally, we use the word insurance to take care of all types of insurance covers that we have with the industry. However, the word assurance means that the whatever risk that is being taken against, because insurance is about risk. And I think the best thing would be to explain what is risk first.
Yes. And
risk, just from the way we know about it in English, is basically the possibility of loss.
Yeah.
And the possibility of loss means that there is a likelihood that a loss may occur. But when you talk of insurance, you talk about those risks that may or may not happen. Mm-hmm. For example, if you buy a car, that car might be stolen, or that car might not be stolen for the rest of the time that you own it.
So that is insurance.
That is insurance.
Yes.
You can also have, it can have an accident or may not have an accident. So anything that may or may not happen is called insurance. But now, when we take life cover, we know that at one point in time, one will pass on.
It is a must.
That one is known that at one point, the creator will call you to grow it.
To order.
Exactly. Okay. So now that is one that is usually, we are sure that at one time it will happen. The only now difference that will happen during the time that you have that contract that exists between you and the insurance company, which we are in. For the life insurance companies, we call them life assurance companies. Okay. That's why the question was, why is it that you come from Kenya Orient Life Assurance?
Yes.
I think I hope I've been able to answer that too.
I think Kenyans are now more knowledgeable.
Yes.
But the uptake of these life assurance,
yes,
whatever you call it, a scheme,
yes,
is the uptake is very low,
yes,
amongst Kenyans.
Yes.
Or is the reason?
I think I can probably talk about two reasons.
Yeah.
Number one is the exposure. How much do people know about insurance in general? And then as much as they may not know or may not know, how many of them want to go an extra mile and take that cover or take that benefit or ensure that they have that benefit. That is number one. Number two, we also have other competing products that come into play, and people will make different choices. There are those people who will say that I would rather take maybe a SACCO benefit, or another person will say that let me take insurance. Another person will say let me go to money market. All these are choices. But the most important thing for viewers to understand is that all these ones are important, and at any one given time, you need to have one. It's just like the way usually when you take diet, when you are taking food, you do not consider take one type of food, but you get more different types, so because you also are interested in the balanced diet. So that's why all these ones are important. At one point in time, you need them.
I think many Kenyans, if not majority of them,
yes,
they think insurance or assurance, whatever these kinds of scheme, it's for the wealthy and the rich people.
Yes.
That's why they're not involved.
Thank you very much. Gibson, I will say this.
Is it affordable?
Actually, I would say that life insurance is very affordable. Let's use the word insurance for the sake of the viewers, so that they will be able to understand better. Insurance is very, very affordable. Actually, if you look at, for you to purchase insurance, what you do is that you're able to give what we call contributions or premiums. The word that we use for that is premiums, but all that it means, it is basically contributions towards your cover. Mm-hmm. When you take a life insurance cover, and I think I would like to say this, a cover is basically a contract between you, the person who is holding that insurance, who we call the policy holder, and the insurance company, who we call the insurer or the underwriter. Those words mean the same thing.
Yeah.
So that contract, that's agreement. Basically, a contract is just an agreement between you and the insurance company that I'm going to have this cover land for this particular time. Within that particular time that it's supposed to land, you have to, as on your part, you have to honor the obligations. And one of the key obligations is the contributions. So that once you are giving these contributions, the cover lands. However, as you say, most people think it is for the wealthy, and that is not that's not the case. It's actually very, very affordable. To an extent that for as little as Kenya shillings 2,000, one can take a life cover and enjoy. But now it depends on a number of factors. Number one, it depends on the age. It depends on how much are you planning to put aside or target amount, and at the same time, the status of health. So those are the issues that usually determine, and also how frequent do you want it to happen.
At the Kenya Orient, sorry to cut you short.
Yes,
The Kenya Orient Assurance,
yes.
What is the lowest premium one can pay?
For a life cover, you'll be able to get a cover at 2,000 Kenya shillings, but as I've said, we need to calculate based on the age, because that will depend on the age. Because the younger you are, the lower the premiums, and also depending on the term. The term, when you talk about a term, is how long do you want that plan to run? It is, our covers run for as short as 5 years and as long as 20 years. So if there's people of the same age, taking a cover for let's say 5 years will not be the same amount of money. If the therefore amount they are looking for is different. Also on the term, also all those they depend on the choices that one is making.
At what age going up and then going low?
Yes.
Maximum age?
Maximum age usually allow up to 65 years of entry, but that is for individual. You know, you have what we call individual life covers, and you also have what we call corporate covers. Like
so at 65 years,
yes,
if you're unemployed,
yes,
you want to take a life assurance,
yes.
How much do you pay?
No, okay. There are other factors that will matter. Yeah. So I cannot say specifically this is the amount of money that you will be able to pay. But once we get into the details of what level of coverage do you want, how long do you want it to happen, then we're able now to
for life.
Yes, for 5 years. For 5 years. Yes. So there are those matters that we have to consider. Yeah. We cannot say outright this is the match, because if you do that and a viewer is watching and come and say, I want to pay this, you say this is how much we pay. So there are a number of factors that...
minimum, can you say roughly, a rough figure, a minimum?
Roughly, depending on the different products, it can be 10 to 20,000 will be able to... then
the minimum age?
The minimum age is 20 years. 20
years?
Yes.
Why 20 years? I thought if you have an ID, you're an adult,
yes,
you can insure yourself.
Yeah, we can insure yourself. Okay. What happens is that based on the current product that we have, we take from 20 years. But as you say, there are those even cover that you can get as 18 years of age. But it depends on the organization and the particular products that you have. But comfortably, as long as you have an ID, that is acceptable. Because you say that as long as you have an ID, that is you are in for contractual. That is, you meet the contractual the contractual requirement for you to enter into a contract.
But generally speaking, if a normal Kenyan back in the village there,
yes,
they ask, why should they take a life assurance or a life insurance scheme?
Yes.
I will die anyway. I can plan for my family. When I leave, they'll have maybe some land or some property to inherit. Then why should they take a life insurance?
Now, the reason why one has to take a life insurance is that today you have seen what happens if, in case that they say like you have land. We have had so many issues that are touching on land. You may own this land today, but along the way, you realize that the way the land was acquired, we have a lot of issues. So you leave your dependents at a high risk. Number two, the goodness with taking insurance is that insurance has various benefits, which I can maybe give. Let me give three. Number one, when we share why life insurance is good for everyone, the number one is what we call protection. Protection is that if there's nobody who plans, even let's say, for example, when you die, we also say that that protection is also called security. No one knows when that time will come. So you may be planning for that land and you have not even finalized on the transactions. So that ownership is not yours. But when you have life assurance, it will be able to pay to the next to your dependents, and they can, as they plan to handle those issues of transactions and the completion of the ownership, they can even use that life insurance proceeds to go and cruise on that matter. Number two, you may have, for example, even you can have acquired property. You may have real estate. You have maybe buildings that you have as rentals. Then all of a sudden, an earthquake happens. If they are swept away, what is your fallback position? Life insurance will come in handy. So that's why we are saying that at least it is always a good risk. Just like the way you say, you cannot say that you have enough water. When you have already taken a lot of water in the morning, you are not going to get that thing during the day. But you will be able to take more water so that you can be able now to keep learning. So life insurance is something that is very, very key in terms of the financial well-being of a person.
Now, Benedict, what is the best age for you to take a life insurance or life insurance scheme? Because Kenyans, or let's say young people like me, I believe I'm healthy and I'm so strong, and I believe I'm not dying anytime soon. God forbid anything happens. But why should I take, at my age, a life assurance? And I know I'm very healthy and I'm very young.
Thank you very much, Gibson, for that. That's a good question. I'll go back to what you asked. As early as 18 years of age, you can be able to enter into a contract. That is the best age for you to take life insurance. Why? Life assurance, as we have agreed that it is, we are using the word insurance for the sake of our viewers and understanding, is that when you are 18 years of age, life assurance is very, very affordable, more affordable than for a person of my age. Because the younger you are, usually say that the possibility of death is very low. But as you grow old, which is, we all agree that old age is one of the key factors of death, of somebody dying. But for the person who is young, that possibility is lower. So when we are calculating the premium that a person has to pay, we use what we call mortality rates. Mortality rates are rates which are given at any particular age. What is the what is the likelihood that person is going to die? So the older you are, the likelihood is higher. But the younger you are, and that's why for you, Gibson, actually you need one. If you don't have, then you need one. As much as you feel that you are young and you have prepared yourself, there's no one who has enough insurance coverage. That I would say. You
said maximum age of taking life insurance is 65 years, right?
Yes, for some of the products, like individual. But we also have we have what we call corporate life as well, whereby you come in, let's say, like, for example, if one is taking a life insurance cover for the sake of for credit life, we usually say that those people with loans, they also take insurance cover for the sake of protecting them against disability or death during the time that they are servicing that loan. But it can go up to about 70 years.
Specifically for life insurance, is 65 years.
For an individual, yes.
Why not 70? Why not?
Okay,
is that not discrimination?
No, it's not discrimination.
Are you assuming a person at 70 years could drop any time?
No, what happens is this, like now I've told you that in case you are taking a cover against credit, you go up to 70 years. It usually depends on that particular cover that one is considering. You also have what we call last expense, and you're able now to negotiate based on the ages that the group is coming with. That is the different ages. We're able to come up with an age that is it is the maximum that we can allow you to enter. But for the individual, that's, we have when you asked me about our products, I actually told you that we can accept up to 65. But we also have products that are not necessarily on the individual part, but they also accommodate the families, and we can be able to take up to 70 years. But even beyond that, based on the credit, you can go up, we can consider based on the up to 75, but based on the medical health as well.
If I take a scheme today, a life insurance scheme today, and I live to 100 years, and I'm not dying, what happens?
No, by the time you're taking that cover, there's a what we call the exit age. There's already as I told you, is a contract. There's always an exit age that is usually given, and that exit age is the one that determines. So the exit age might be 85. So beyond 85, you are not then covered. Yes.
But then you continue living. What happens?
Okay, as I will take you back, Gibson, to what we say. There's a contract, and this contract
is a contract expires maybe at 80 years. At 80 years, but then this person continues to live.
Yes. You know what
So
happens?
you get your benefits.
What happens is that these benefits. Okay, let me put it like this. You're asking a very good question. These benefits that we pay you, which we call the maturity proceeds, for example, you can reinvest that much. Like for example, when you get, let's say you're taking at 65 and you go up to age 75, it was maybe a 10-year plan.
Yeah.
You can reinvest those proceeds to what we call an annuity cover, whereby it now you convert it to a pension, whereby you now continue earning. Even the one that already 8 years for the you mentioned, those proceeds can now be reinvested. You can even go to, let's say, a money market fund. You can reinvest that money, or you can still take, like the way I talked to you about an annuity, or what you even call an income drawdown, which is also a benefit that can help you to reinvest those proceeds, and you're able now to earn more.
So you don't have to die for your family to benefit. You can still benefit from this scheme even when you're still alive.
In fact, I think that comes to, probably that's why we should have started Gibson, because most people think life assurance is about death.
Yeah, that's it. That's it.
So now I want to demystify that today, and it's good you have asked that question. Number one, when I mentioned to you that is a cover is basically an agreement, or which you can call a contract, there are other benefits. In fact, death is only comes in if it happens during the period that you're having that coverage. Otherwise, we have other benefits. For example, in the case, for example, one becomes permanently disabled along the way. Because when we talk about life assurance, Gibson, we are simply saying you have taken a life cover for 5 years, 10 years, and let's look at it from this angle. What is the worst case scenario that somebody who has taken a cover for 10 years can happen? The worst can be death. That's the time that that is the only time that we shall consider it. If somebody happens to pass on before, 10 years are over. However, this person can also be disabled and not die. So what happens? What we usually do as an insurance company, we assure you that if we have gotten disabled along the way, there's what we call a waiver of premium benefit that goes hand in hand with that cover that you took, and that allows you to continue enjoying that cover even if you do not continue to pay because you became disabled. When you became incapacitated, you lost your occupation, or you lost the ability to earn. So then that means that you enjoy that one. At the same time, life assurance covers also have a possibility of you getting a loan. Yeah. You can get a loan against your policy or that life assurance cover as a collateral. Okay. This is another. We also have other benefits, and all these are usually attached to the life cover. Death is not the only thing. And you also enjoy what we call forced savings or discipline savings. Once you continue contributing, you have been able to set aside a number of a certain level of a fund that you could not have done had you not taken a life cover.
Thank you, Benedicta. Yes. That is Benedicto Makena, the head of life insurance. The Kenya Orient, Benedicto Makena is the head of life and pensions of Kenya Orient Life Assurance Limited. Thank you for making time for us, and of course educating us, even our viewers.
Thank you very much.